Hello and welcome to Smart Mortgage Insights. I'm Mandy LaRose.
And I'm Conor Lavinka. Today we're going to talk about after you get your pre-qualification, what if it is not as much as you had hoped for? What can you do then?
That's a great question, Connor. So today, like Connor said, we're going to cover increasing what you qualify for, and or maybe it's not exactly where you want it to be. So we're going to give you some tips and hints on what you can do to do that. So one of the first things you can do is obviously increasing income. That's not always the easiest thing to do, but maybe you're in a position at work that it's time to ask for a raise. Maybe you've been there for a while and you've been working your way up, so it's time for a promotion. So asking for a raise at work, and or maybe applying for another job in your field that's going to increase your income as well. It's important that you do stay within your field, mainly because we don't want you job hopping around, switching from being a school teacher to a chiropractor. Yes, that's a great switch. However, we do need to see some time under your belt before you just do that. So being able to increase income, getting a new job, things like that will also help. Maybe applying for a second job. Now, in order for us to count income from both of those jobs, you do have to be working two jobs consecutively for 2 years. But that's another way of being able to maybe save some more money to increase what your down payment's going to be. So being able to get more income by one of those means would be a great way to help you increase the amount that you qualify for at this time. Connor, what are some other ways that you can help increase your buying power in this market today?
The other way is just simply to decrease debt. So when it comes down to it, everything that we do with all of our loan programs is debt to income. And so what Mandy just mentioned is increasing income, which is a great idea. But at the same time, maybe we could focus on decreasing debt. So to remind you a little bit about the debt, we have to take into consideration all of your fixed monthly debts and the payments that are associated with them. So that includes car payments, credit cards, student loans, anything else you have a fixed payment on. And so to remind you, for a credit card, if you owed $2,000 but your credit monthly obligation is only $25, all we care about is the $25. So paying down that $2,000 credit card to $1,000 and still having a $2,500 minimum monthly payment, believe it or not, won't change your approval. Now, auto payments are a little bit more. Say, for instance, you have a $600 or $800 auto payment.
Which is very likely today. It's
Today's market is
very average that we see that.
that's normal,
Yes.
which is great. That's no problem. However, if you're trying to augment your approval, maybe you can refinance that car to a lower payment with a longer term so you could get a higher credit on our side of things. Or maybe you have an extra vehicle and you can sell it. Kind of the same thing about maybe you can consolidate a couple of credit cards and get, one $25 payment instead of three $25 payments a month. So all of those things will help you. These are where we come into play as loan originators to really help you strategize on how you can reduce your monthly payments and maximize your total approval amount.
Yeah, so it is important if you do get the amount that you qualify for, and it's not something that necessarily you wanted to qualify for more. Make sure you ask us, speak with your loan officer, talk about ways that you can improve that. Sometimes we just can't improve it. It just is what it is at that moment in time. But sometimes there are ways of improving that and being able to get you qualified for more.
Exactly, and we're here for the long run. So if this takes 3 months or 3 years, we will be there for you and we'll make that plan for you. So the next thing you can do is maybe put more money down. You can get creative with how we're going to do that. Maybe you have a 401k at work, maybe a brokerage account, something that you can get money back from to add to and make a larger down payment. Because remember, we don't care about the total purchase amount. We just care about the loan amount. And so if you're able to bring more money to the table, you would get a lower loan amount and we could easier qualify you for that. The next thing is maybe you can get a gift from a family member. virtually all the programs that we have, you can use a gift for part of the down payment. So that's something to really consider. What else can we do, Mandy?
Maybe if you don't, maybe you're having issues just qualifying at all, and you've come in and your credit just isn't quite where it needs to be. So some other things you can do to basically improve your credit, first and foremost, especially if you don't have credit at all. Sometimes it's hard to get credit. Just going out and applying for a bunch of credit cards isn't going to get you credit, especially if you have no credit at all, because getting credit goes off of what your credit history is. And if you don't have the history, it's hard to do. So a great way to start is with your bank. You can get what's called a secured credit card. And basically what you do is you put a deposit down, generally around $250 to $500, and they will then give you a credit card based on your own money. You're going to very lightly use that credit card each month. It's very important that you don't use more than 30% of your credit limit at any given time. Makes up a huge part of your credit score. And as you use that on a monthly basis, generally after 6 months, 12 months, if you've made your payments on time, you haven't abused the card, they will turn that into an unsecured card, and now you'll have a regular credit card. Also, if you don't have any credit at all, again, a great way of building credit is with that secured card. And after 6 months of making payments, you will now have a credit score. And then that will obviously help you to be able to move closer to home purchasing. So if you don't have credit at all, that's a great way to start. And again, we can guide you through that process as well on being able to help you with the credit and guiding you in the right direction to get that.
One final way that we see credit improving and actually developing a score very quickly is being added as an authorized user on someone else's credit card. That typically is a family member where they would get you a credit card, have your name on it. We see scores populate very, very quickly, and it's a great way to build credit. So keep that in mind.
Absolutely. I mean, and we've seen it where parents have done this with their kids, where they've had them as the authorized users, husbands helping wives build credit, wives helping husbands build credit. And you don't have to give the person the card when they're added on as the authorized user. So if you're worried about handing your teenager your credit card, I totally get that. But a great way to help them build credit at an early age by putting them on that card will definitely help.
Huge benefit. Again, thanks for joining us today. We look forward to seeing you next time. This podcast is sponsored by Residential Mortgage, LLC, NMLS numbers 167729, 196 576, and 1820404. Equal housing lender.